Today I'm going to be teaching you my insane scalping strategy that would allow you to make up to $3,000 a day. And if you stay to the end of this video, you're going to be learning which supply and demand zones are the best to take, what makes a supply and demand zone invalid, and I'm even going to tell you guys the exact time to enter. So if you haven't already, get you a pen and paper, turn off your phone, and it's time to lock in. Let's get it. So first things first, you need to know what supply and demand is. So I'm going to run through this real quick, but if you want a more in-depth tutorial, check out my last video. I go into extreme detail about everything you need to know. So first, what is supply and demand? The easiest way to think about it is supply and demand is when the big whales or the big banks enter the market. And we obviously want to be trading with the big players, not against them, right? So this is how you identify them. All we're going to be doing is looking for a big push just like this, where all the candles are the same colors and they're showing momentum, right? You want to see it dropping. You want to all be the same color. You don't want to see no greens in the middle, right? You want to just see it push like this. This is a great supply push right here. It's very strong. Here is an example of a demand. So this is a demand push right here. You see how it's very strong, very big candles, same color. There's no red candles in between. It's very strong. This lets us know that a bank entered right here and it pushed the market up, right? So that's how you find a demand, and this is how you find a supply. Now, supply zone just means it's a sell, right? It's going down. Demand means it's a buy or a long. It's going up. It's very simple. Do not overcomplicate it. Now, let's look at a couple more examples so you know what to look for. Okay. Demand zone. Same colors, pushing up momentum. Demand zone. Same color, pushing up momentum. Supply zone. Dropping with power. All the same color. Looks great. Banks entered up here. Supply zone, same colors. So that's really all you need to know. If you want to go more in depth, like I said, check out my last video. Now we got to talk about the gaps in the market. Now, when I figured out the gaps in the market, it was like the blindfold was taken off my eyes, right? This changed everything for me. So this is how you find a gap in the market. So if you zoom in, and usually they're on supply and demand pushes, which is going to correlate with our strategy, you will see that price pushed so strong that it didn't have enough buyers to push this back up to make a wick, right? If you don't know what a wick is, it's this little line coming out the candles. This little line coming out this candle, this is a wick. It's kind of like a tail. This is a wick, 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 right? All these little lines are wicks. So in the market, when candles form, the wick has to come back and touch this candle, right? So if we just put a quick little line at the bottom of this candle, right? If price was not making a gap, this wick right here on the third candle would have came back up and tapped it, but it didn't. So that means there's a gap in the market, and every gap in the market needs to be filled 100% of the times. This is one of the only things that happens every single time in trading. 100% of the time it will get filled. We don't know when it will get filled, but if we can get that right, then we can start making some money, right? We know where to look. We know price wants to come right here and fill this. Right, and you can see it came back and filled it. So we were in a strong push down, right? You're probably thinking we're gone. We're never going to come back up here again. But there was gaps left right here. So there's another gap right here. There's a gap right here. There's a gap right here. There's a gap right here. So all of these need to be filled. So you know price is going to come back and fill it. Is it going to fill it today or next month? We don't know. But we need to mark these out to know what's happening. So this is the way you identify a gap. So let's say you see a candle, you're like, you know what, I don't see no wicks on the sides of it. I think this is a gap. Well, this is how you make sure you get your horizontal ray. Like I showed you earlier, you're going to put it at the bottom of this candle, right? This will be considered the first candle, right? Because if this candle is the one with the gap, then this is considered the second candle. The gap's always on the second candle. You want to go to the first candle to confirm it. So you put your line at the bottom, you're going to skip the second candle, the one that we think has the gap, go to the third candle and see if the wick or the candle came back to touch this line that we put on the first one. If it didn't, then we draw another line at the top of that candle or the wick if it has a wick. You put a line right there. If these lines aren't touching, we have a gap in the market, and this is your gap. This needs to be filled 100% of the times. Just to prove it to you, I'm going to just go back to a random spot, and we're going to prove it. Okay, let's mark up a gap that we haven't seen yet. Okay, look right here at the bottom. Let me put this in replay mode. Okay, so this candle, we need 3 candles. So let's go to the next one. Oh, it took me all the way to the beginning. Wow, that was just great. Okay, let's go somewhere else. Go around the spot. Put this in replay mode right here. Reset that. Okay, perfect. We landed right on a gap. That's great. Okay, there's a gap right here, right? This wick is not touching this line. So we put another line right here to make sure the gap is drawn out and we know there's a gap, right? So there's a gap right there. So let's just push play. Oh, I don't know why it's not letting me do this. What is going on with this today? It says I have no connection. I don't know what's going on with this, bro. All right, guys, so I just had to go on my browser to do this because my app was just shutting down. I don't know, but let's go to a random place. We're going to hit replay mode. Where's replay mode at? Replay mode right here. Reset that. Okay, so we have a gap right here. We have a gap right here, right? When it comes to buys, it's the exact same thing, just the other way, right? So for sales, we draw the first candle at the bottom of the wick. For buys, we draw it at the top of the wick of the first candle, right? So let me just show you so it's clear. For sales, right, when we think there's a gap, because there's a gap right here, we will put it at the bottom of the candle of the first candle, right? If we think this one has a gap. Then we would go to the third candle and draw it at the top of the wick of that. So this would be our gap, right? But when it comes to buys, this is the candle with the gap. So we go to the first candle, we draw it at the top. And then we go to the third candle and draw it at the bottom when it's buys, right? So this is the gap that we want to be filled. It already looks like it's going to be filled, but let's see. Okay, it got filled. So every gap is going to get filled. We could just go to another random one. Let's just go put this in replay mode for a random place. Okay, let's just mark up these gaps that haven't been filled, right? So there's a gap right here. There, the gap up here on this candle, right? So there's gaps right here. Let's see if there's another one higher. Okay, so the gap right there to right there. So all these gaps are gonna come get filled. Push play. Let's just wait. Okay, one gap filled. Two gaps filled. Let's hit this top one right here. Okay, we drop in. Now we're coming back up to it. Come on now, make it up there. Just gotta wait for it. Be patient. It's gonna get filled every time. Every gap gets filled. So let's just wait. Let's just keep waiting. It's gonna happen. It's gonna happen, I promise you. Okay, gap was filled right there. Now, I bet you guys thought it wasn't going to get filled and I was about to look stupid. I know it. You guys were like, man, this guy don't know what he's talking about. Trust me, bro. Look how long it took. It took 3 days for it to get filled. I really could have went on a higher time frame and sped that up, but it took 3 days for it to get filled, right? Every single gap is going to get filled. And I want you to notice how many times price turned around as soon as it tapped it. Like, look at it. Tapped it right here, dropped crazy. Tapped it right here, dropped crazy, right? Every now and then it'll break through. And that's why we got our other confluences or reasons to enter the trade. We don't just enter because there was a gap. We got to have multiple things telling us to enter, and then we catch moves like this, right? So there, I just proved to you every gap in the market gets filled. So let's remove this and let's get out of replay mode. So now we know about supply and demand. We know about the gaps in the market. And now we got to go over a break substructure, right? Because you need to have a break of structure. Everything that I'm teaching right here is vital. You cannot skip one thing. So when it comes to market structure, the market likes to move in higher highs and higher lows. So this is what that is right here. The market moves in higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? That's a higher high and a higher low when we're trending up. Now, when we're trending down, market likes to make lower lows and lower highs. So we make a lower low, lower high, lower low, lower high, lower low, lower high. And you're probably thinking, well, how do we know if it's a valid higher high or higher low, right? Now you're probably thinking, how do we know if it's a higher high or higher low? Well, is this high higher than this high? Yes, it is. Is this low higher than this low? Yes, it is. So it's very simple. Let's not overcomplicate this. It's in the name. Higher high, this high is higher than this one. Higher low, this low is higher than this one, right? But now, when it comes to breaker structures, so if we know our pattern is going higher high, higher low, higher high, higher low, once it comes and breaks this higher low, instead of making a new higher high, then you have a breaker structure, right? So you're probably saying, what do you mean? So let me just erase this so I could show you visually. Price is making higher highs, higher low, higher high, higher low, higher high. What do you think is about to come next? A higher low, right? Because it's been doing that. It has a pattern, right? But if it doesn't make that and it makes a lower low, and then it comes and makes a lower high, right? Now we're changing trends. But when price went from this higher high to this higher low, we did something called a breakup structure. This is the breakup structure. Once price came down and closed under the previous higher low, this is called breaking structure or breaking the pattern. You could think of it like that, right? Because we're in a pattern. We were making higher highs, higher lows, higher highs, higher lows. Then we made a higher high and then we made a lower low instead of a higher low. So we broke the pattern, right? This is a breaker structure and it's a great indication to let us know that price is about to change directions and start making lower lows and lower highs going this way, right? So we want to catch this move. So that's what a breaker structure is. So now let's look at the charts, but instead of looking at an uptrend, let's look at a downtrend. So it's the same thing, just the other direction. So we have price right here making a lower low, lower high, lower low, lower high, lower low. And then what happens? We break structure. Instead of making a new lower low right here, we come and make a higher high. So once we made this higher high, we now broke structure. So what you do is get your line, you draw it right here at the top of the candle bodies. You draw it across like that. And now this is our breaker structure, right? So once we get this breaker structure, we know that price is telling us we're probably going to make higher highs and higher lows now and switch trends. And look what happens. Made a higher high, higher low, higher high, higher low, higher high. So we change directions, right? So that's what the breaker structure is for. It's very important. You need to have that down. So that was an example of a breaker structure. Now let's look for another one. So this is an uptrend example. So we're making higher highs, higher lows, higher highs, and then instead of making a new higher low, we came down and we broke structure to make lower lows and lower highs. Where is the breaker structure? It's right here. So now that we marked up our breaker structure, we know that price is probably telling us it wants to change directions. So now I'm going to teach you how to mark up the supply and demand zones, right? Before I teach you how to find the supply and demand pushes, now I'm going to teach you how to draw the supply and demand zones. So when you draw a supply and demand zone, we're looking for a supply and demand push first, right? So we say, okay, this right here is a supply push. Now we got to figure out, is there a gap attached to the supply push? And we want it towards the top, right? It's very important. We don't want the gaps down here at the bottom of the supply push. We want it at the beginning, right? So we have a gap right here that I can see. So let's mark it out. So we got our horizontal ray. First candle right here. We put our line, we can see the third candle wick is not touching it. So we take another line and we draw it at the top of it, right? So now this is our gap. So we have our supply push, we have our gap in the market. Now to mark up a zone that we want to be entering when price gets to, we're going to go to the first line and then we're going to draw it to the swing high, right? The swing high is the top of this wick right here. Now it's very easy to identify a swing high. Price comes up, swings up, and then drops, right? And makes our supply push. Right, so just look for the highest point before we got that supply push, which is right here. It's very simple. So we just draw from the first line to the highest point before the push, and that's that. And then you're going to want to drag it out. Draw your rectangle out like that, and you can see price came, tapped it perfectly, and dropped. Now, the reason why we draw it like this instead of marking up this box with the rectangle is because after years and years of testing, I've found that price likes to fill the gap 100% and then reverse. So once it fills 100%, it will be entering our box, right? So that's why we do that. I'm telling you, I'm teaching you guys advanced stuff here. I'm not teaching you the basics. This is real stuff that I use every single day to make money. And you can see it worked out perfectly right here. So that's how you draw a supply zone. Same thing with the demand zone, which I'm going to show you right here. We have this big push, right? We say, okay, this one definitely has a gap. So we're going to go to the first candle, mark up the top of the first candle, go to the third candle, mark up the bottom. Okay, this is the gap in the market. So what we're going to do is get our rectangle, draw from the first line to the swing low, right? The swing low is the lowest point before it pushed off. So this is the swing low right here. So this is our box and we drag it across. Now you can see this one, you lost. And it's because I'm only drawing boxes with a supply and a gap. We need the breaker structure. We need other things to tell us to take the trade, right? That's the difference between winning this one and losing this one. Okay, so that's how you draw supply and demand zones. So now that you know the basics of the strategy, let's get into the more advanced stuff, like what zones are the best to use, what makes a zone invalid, and what's the perfect time to enter a trade. So the first thing you want to do to find the best supply and demand zones is go up to indicators, type in trading sessions, go to settings, turn off the second and the first one. So now you're going to have this zone, which is New York session, but we want to be more precise, right? You want to know the best time to enter. This is the best session, but what's the best time? And I got this from years and years of trading. Go to settings again. Go to inputs. So the first thing you want to do to find the best supply and demand zones is go up to indicators. You're going to type in trading sessions. You're going to go to settings. You go to style, turn off the first and second session, go back to inputs. We're going to scroll all the way down to third session. We're going to change this from 9:30 to 10:30 and this one to 11:30. Now this is Eastern Standard Time, so that's why it looks different than my chart because I'm in Pacific Time. So for me, that's 7:30. So this zone right here is the best time to enter a trade. But one thing about this zone is we want to be entering at this zone. You're probably like, what do you mean, right? We don't want our supply and demand zone to be in it. Now it can be, but we want to make sure we're entering in this green spot. So you can see we enter this zone, we pull up here. You can see there's a gap in the market right here. All right, so there's a small gap right there. This candle is not touching this candle, so there's a gap in the market. We have a supply push. So this is our zone, right? So we want to enter in this zone. Now, it's not always going to work out, but you can see price is going to go in your direction. So that's how these zones work. So let's go check out some more zones. Okay, so here's another day. I wanted to show you Wednesdays because we do not trade Wednesdays at all. So if you're watching this, don't trade Wednesday. It's just trash. Don't even got to do the research on it. Just trust me, it's trash. So we have a gap in the market right here, right? This bottom wick is not touching the top of this channel. So we draw it up like this. Now, what happens right in this zone? We come, we tap it, it mounts, right? We're making money. All this is money right here. So this is the first thing that you want to be doing to find the best zones because the setups that happen in here are the best zones. Now, another thing you can add to it, when you have a supply or demand push, it's great to see 3 to 2 candles. Now, there is one candle supply and demand pushes, right, that you can use. But if you have one that's 2 or 3 of very strong candles, it's the best zone to use, right? Also, you want to make sure you're trading with the trend. So remember, we're talking about higher highs and higher lows, right? You want to mark that up on your chart and make sure that you're going along with that, right? So we have lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Like we want to follow the trend, right? Make sure you're always following the trend. That's how you're also going to find the best supply and demand zones. And last but not least, you can't use supply and demand zones that have already been tapped. If it's already been tapped and used, you cannot use it no more. So everything I just told you is going to give you the best supply and demand zones. Literally just having this indicator on and taking it in between that 1 hour is going to increase your win rate through the roof. And now let's talk about what setups you don't want to take. What makes a supply and demand invalid? So pay attention to how we came and tapped this box, right? We had a large candle, and then we got smaller. We have a wick coming out the top. It got smaller and smaller and smaller. And we having wicks rejecting the zone, right? That's exactly what we want to see when prices come into a supply and demand zone. We don't want to see candles getting bigger and bigger and bigger, right? And this is a perfect example right here. Okay, so we have a supply zone right here, correct? There's a gap right here. We push down. This is a supply zone right here. Why wouldn't we take this trade? Because we have a huge candle that's getting bigger than the last candle, and it's huge coming into our zone. With all these buyers pushing the market up this strong, why would you ever enter a trade like this? This is too much power going against us. Our little trade is not going to push this the other way. We do not take risk. We're not gambling. This is professional trading. So when we see something like this, we know not to take it. That's too much power going against us. We're not going to block them and turn them the other way. I'm telling you. So if you see a huge candle coming into your zone, you do not take it. It is invalid. Here is another example. You have a nice supply push, right? Very strong candle coming down. Everything looks good. But what's happening right here? The candles are getting bigger and bigger and bigger, and it's strong momentum candles coming to us. Remember the first trade I showed you? The candles are getting smaller and smaller with wicks to the top. These candles don't have any wicks to the top. And they're getting bigger and bigger, and you want to enter right here? If you see a whole football team running at you, you think you're going to take all of them? All 20 of these linebackers, you finna stop? No, you're not, bro. So don't take that trade. You're just playing with your money. You're risking it. No, not at all. We're not taking that trade. So that makes an invalid setup. I'm telling you, bro, the things I'm teaching you is advanced level stuff that nobody talks about. So now let's put this all together in a trading plan that you can use today to make some money. Let's go. I'm telling you, bro, I'm going to get you right today, bro. I'm going to get you right. So I'm going to clear my charts. Let's go to a random spot. Let's go here. Let's put a replay mode right here, right before session. Oh, wait, where am I at? I don't even know where I'm at. Okay, bet. Okay, we went a little too far. Let's replay this a little bit. I'm going to go right before that green session. Okay, so let's go. Let's wait for the green session to open. Okay, it opens. Okay, price is dropping. Okay, this is everything we need. Number one, supply and demand push. Number two, we need a gap in the market. Gap in the market. Number three, must have a BOS, which is a break of structure. Number four, draw supply and demand zone. Number five, must be in trading session. Must be in sniper zone. Number six, candles must be getting smaller. So this is like a trading plan and rule all in one. You could go in there and make it pretty. You know what I mean? I'm just going to give you everything that you need to look for when you're about to enter a trade. Okay, so number seven is enter at tap of the zone. Enter at tap of the zones. Number eight. Now this is risk management. It's very important. When it comes to risk management, you want to be making 3 times whatever you're risking. So if you're risking $1,000, you want to make $3,000 on every single trade, right? You don't want to risk 1,000 to make 1,000. You will be unprofitable. There's always going to be losing days, even if you do everything right. So you need these winners to be way bigger than your losers so you can be profitable long term. So risk management, you need a 1 to 3 risk to reward, right? So we're going to put 1 to 3 RR minimum, right? That's what I do. You can go 1 to 2, but you can't go under that, right? So maybe start off with a 1 to 2 just to get your feet wet. And then when you feel comfortable, go to a 1 to 3. So 1 to 3 RR. This is everything that you need to know, right? You could even add for the last one, check the news, right? Check for news. So now that we have this, screenshot it, whatever you want to do, make it look pretty on your own time. You cannot break this. You can't go for a 1 to 3 one day, then the next day go for a 1 to 1. It's not going to work. You must be in your sniper zone. Don't take it outside. Now you're being more risky. If you follow this, you will make some money. And message me on Instagram when you start getting some results. I love seeing it, bro. I love to chop it up with you guys. But now let's put this into full effect. Okay, so now that we have our trading plan and our rules set, let's try this out in the real market. So I came right before session opens. So let's go. Okay, so now we're open. Remember, we want to enter in the zone. So first things first, do we have a supply or demand zone? Yes, we do. We have a demand zone right here. Looks good, right? Okay, next thing. Do we have a gap in the market? Yes, we do. The top of this candle is not touching the bottom of this candle. So this is the gap in the market, and you can see it just got filled right when the green zone opened up. I'm telling you, sniper shit, bro. I'm telling you, these zones are different. So now we gotta ask ourselves, do we have a break of structure? And yes, we do. If you can see, price was making lower low, lower high, and instead of making a lower low, it started doing a little consolidation, and it made a new higher high right here. And we just shot up all the way. So now we broke structure right here. Right? Put that at the body of these candles right here. So we have our break of structure. Delete that so we're not all confused. So now we draw our zone, right? Number 4, to draw a zone. So we take our box, draw from the first line to the swing low, drag it out. And number 5 is must be in your sniper zone. We're definitely in there, just opened up. Number 6, candles must be getting smaller and smaller. Yes, they are. And look at this candle, how strong it was. And now we're coming, we're rejecting, we're getting smaller and smaller. 7, we enter at the top of the zone. So let's get our long position. Put it at the first line, put it down to the swing low right here. And now we're gonna put 1 and 3 RR. So this has to hit a 1 and 3. Now this is a huge stop loss, right? So when it comes to huge stop losses, either you can not take them, so you don't want to risk it, or you can go for a 1 and 2, lower it by 1 risk to reward, or you can let it come into drawdown a little bit to get a better risk to reward. But let's just leave it the way it is. Okay. Check for news. Well, that doesn't really count now because we're back testing, but you know, so let's go. Okay, we almost got stopped out. We came back, right? And that's why we put our stop loss under the swing low, because if it breaks that, then we would be breaking structure again, and we're just totally wrong about the trade. So that's why you have to put it there. So we got saved right there. Okay, let's see. Okay, TP was hit right there. So we won this trade. We made 3 times whatever we risked. So now we can lose 3 times in a row, back to back to back, and just be at break even and haven't lost any money. And you're not gonna lose 3 times back to back with this strategy. So this is what I'm trying to tell you, bro. This is how you become profitable. Because now you can afford to take losses, and it doesn't hurt you because you know the next trade that you win, you're gonna make 3 times whatever you lost. So let's see, did it stop right there or did it keep going? Okay, it shot up like crazy. Ooh, look at that. Look at that. What is that? 1 to 8. That's a 1 to 8 risk to reward, bro. You can lose 8 times back to back and still be at break even, not even be unprofitable. This is the power of high risk to reward supply and demand. When you know the best zones to take, this is the type of results you get. A lot of people wonder how I got so rich so fast. This is it, bro. I'm like the only one who does high risk to reward supply and demand because I figured it out. And now I'm sharing it with you guys. I'm even dropping a brand new course. It might be out right now. You better check that description, because if it is, this is nothing compared to what I'm dropping. But anyways, so this is everything that you need to know to be a profitable trader. I don't want you guys to let this be another video that you watch, you try maybe 1 to 2 trades and you give up. This is the answer, bro. You're gonna make a whole lot of money. Now, if this seems a little too difficult for you, then I would recommend you buy my course, because it's only a 2-step process and you enter a trade. We don't need none of this stuff. It's not supply and demand. It's something brand new that I created called FXC Trading. That's it for this video. I hope you guys enjoyed it. I'll see you guys next time. Let's make some money, bro. Peace.